Hey there, Sally Vance here with Cross Country Mortgage. So I wanted to take a few minutes today to talk about some of the misconceptions with down payment on a mortgage. So we talk to a lot of customers, and I even just out and about talk to a lot of folks who believe you have to have 20% down before you can purchase a home. This is actually a huge misconception, and I might say this might be maybe even back in your grandparents' days when this was still a truth. To be honest, there are lots of options now for much lower down payments, but it's really going to depend as well on the type of loan that you're getting. For instance, an FHA loan, which is a loan backed by the Federal Housing Administration, is very popular for first-time home buyers. That loan is only going to require a 3.5% down payment. So meaning if you buy a $100,000 house just for easy money, you're only going to be required to pay $3,500 of down payment. But keep in mind, you're also going to have closing costs. We'll talk about that in another video, but you will be expected typically to have about 2 times your down payment in order to close on a house if you're doing a minimum down like 3.5%. Now let's talk about a conventional loan for a minute. This is going to be your traditional Fannie Mae or Freddie Mac backed mortgage that you're going to hear about if you're listening to CNN. So typically you might think that you need 20% down on a conventional loan, but again, this is actually not true. You can do as little as 3% down if you're a true first-time home buyer or you haven't owned a home in 3 years. 3% down on a conventional loan. The main difference you're going to see here is that you're going to have PMI, primary mortgage insurance. So anytime you don't put 20% down, you will pay an additional insurance that actually covers the mortgage company from foreclosure. So if you foreclose and you do not end up paying your mortgage, that PMI will cover that 20% equity that you didn't pay down. So that's essentially how you can get a lower down payment on a conventional loan. Then there's some other options. We have VA loans as well as USDA loans that require 0% down. So the reality is, if you're a renter out there, it might not be that difficult like you think to buy a home. With rates as low as they are right now, I personally believe this is the very best possible time, even with those purchase prices creeping up a little bit. That interest rate being low is going to make a significantly larger difference over the course of that loan. So again, if you're renting or you know someone out there who is that would like to talk to me, I love to do free consultations with people and explain to them exactly what they can do to get into a home and start building that equity instead of someone else's. You can always reach the office at 386-478-4811. Thanks for listening.